me show you, for example, euro, right? Everyone likes the euro, everyone likes the crude oil, everyone is interested in currencies and Forex. So let me just put it here for the Forex, for example. I'm going to add the ATO at the open, which is right there. Okay, so here is the ES, and let me switch to the euro 6E. Okay, so the euro right now has given a short signal to go short at 12.98. So I expect the market from this 12.98 to go down. Look at the current conditions. It's only working at 3 ticks. Slow, right? This is pretty slow for a 5-minute chart, definitely. Now, the problem with slow markets, we've seen this last couple of weeks, is that it may touch your limit order, but you don't get filled. It may touch your profit, which is also limit order, and you don't get filled. So how do we manage that? Because touching and not getting filled doesn't help. So trade management, something I teach, is very important because of the risk. When the market, here, I'm just going to put this here, we'll see what happens with this. When the market touches, for example, let's say it's a long trade, and the market comes up and you have a limit order to go long here, or you have a target to go long here, getting out of a trade. And when this touches and you don't get filled, you have to ask yourself, was that the only opportunity for this to occur? Because if it touches one time with 1 or 2 contracts filled and the very next candle comes down, do you really want that to be a stop, right? And I would say to you, no. So when it comes to trade management, if the target was touched, but you didn't get filled, maybe your neighbor got filled, but you didn't get filled, why would I hold on to that trade? So think about, under slower conditions, this idea of it hitting your target or hitting your entry and you don't get filled. That price was tagged, but you didn't get filled. You either have to say to yourself, forget it, that was the event and now I'm moving forward to the next trade, or you have to manage it where the next time this happens to touch, you're going to manage it differently by what's called front running. And front running basically tells me that it tried to go through this. I didn't get filled, but it touched that price. On the next candle or the next attempt, I'm going to drop it down by 1 tick or 1 pip in order to fulfill that. Now remember, markets love to test where they've been. So if markets love to test where they've been, it would make sense that it's going to want to test this price, whatever it happens to be, this high or this exact price. So instead of me keeping my order here, I'm going to drop it down by 1 tick, just 1 tick, to ensure that when it does test that and it goes through it, I'm filled. So that's called front running. That's one way that we can manage a situation where the markets are slower, they're hitting our targets or hitting our entries with limit orders, but they're not pushing through them in order to get filled. Drop it down by a tick. We know what the ATR is, so instead of going for 5 or 6 ticks, you'd go for 4 ticks instead, or 5 ticks. So you're dropping it down by front running it. The other way you can do it is by an order called Market If Touched, MIT. MIT orders are great because when it touches that price, it doesn't matter if it's just 1 contract traded or 100 contracts traded, it converts that order into a market order. So even though you could have slippage, it's typical, a 1 tick slippage is normal on the E-mini in most markets. MIT ensures that it touches your price and you're filled regardless. So I'd rather be filled on 1 tick less of a target as opposed to touching and not getting filled, touching and not getting filled, and then it turns into a loss. So remember, front running is this idea of, I realized that the market touched my price here, but it wasn't able to go through it, so I didn't get filled. The next time it tries that, I'm going to drop it down by a tick because I realize the market's slow. I realize that it may not go through it. So if I'm going to take and hold out for 8 ticks, but I have the opportunity to take 7, I'll take 7. Or if I realize this may be a loss and I can place this with a 2-tick target instead of a 3, I'll take a 2-tick target any day. So I want you to realize how this works with front running, whether it's on entries into the market or exits with limit orders and profits. And a good example of that would be, so for example, these two candles right here. If this was your limit order target, right? You said I want to have this price at 1360, 1306, or 1306 I should say, and that's where I want to take my profit. I'm long, it touched it, I didn't get filled. The next time it does it, instead of having your target here, drop it down by a tick. And that way, when it surpasses it, you're filled and you don't have to worry about that. It just collapsing. Does that make sense to everyone? Anyone have any questions? It's called front running, or market if touched MIT orders are another way that you can handle it. Now, in addition, sometimes you don't have this opportunity. Sometimes the market touches your target just one time, you don't get filled, and then it immediately reverses. So let's say that this high up here was your target and it touched it. You didn't get filled. Everybody else except you got filled, right? Luck didn't work for you here. Now, if you have an entry that was here, and as soon as this happens, you place your limit order down, so you're trying to get filled, and it doesn't. It just turns around. If the market comes back, you're out of the trade. You're not going to allow this missed opportunity to convert into a loss. So trade management is not just front running. If it gives you the opportunity, great. But it's also realizing that this may be the one and only time your target was reached, and now the market is moving in a different direction, different opportunity now, maybe going short, and you don't want to have the market go beyond where you entered to convert into a stop. So if it happens to come down, remember, we have time-based stop, we have proof, we have pivotal stops, we have all these other stops that will get us out as well. But in reality, how can I allow the market to just run away from me after it hit my profit target? Put your stop or your limit at break even where you entered. Put your stop or your target at maybe a tick above so you can pay for commission, or maybe even a tick or two lower so you lost a tick or two, not the end of the world, but at least you're not allowing this to just go ballistic against you and go straight against you. That is a big problem. So if this was your target, you're short and you're holding on to it and it touches your target and you don't get filled, and eventually it just comes straight up to where you entered, exit. There's no reason to allow that to be a loss. Trade management. Excellent. Okay, very good. Very good. Go back to the E-mini S&P. Anyone have any additional questions? I see some of you are taking some of these trades. Just remember, there's so much more that we have to learn from. It's not just the at the open or the Atlas line or scalping. I mean, these methods are great, but take it the next step. Take it with risk management. Take it where if I don't get filled on these orders, that I need to manage it accordingly. So look at, I think, not just one element of it. Use multiple stops. Use the indication that the market may be slowing down, which is perfectly normal, right? Market wakes up, a lot of volatility, and then as you go forward in time, it gets slower and slower. Absolutely normal. But if you haven't seen that ABC video yet, you can see that the market almost always slows down as we get closer into the middle part of the day. It's a free video that I have out there. I did one a couple days ago, and it's on the blog or on YouTube. You guys can see it. And this tells me that the market itself is normally going to slow down, and unless a trend is happening, it typically continues and slows down. So absolutely normal, and you should understand how that works. Okay. So managing slow markets. How do we do that? We manage slow markets by front running, by immediately putting your stop where you entered. If it touches your target and you don't get filled, you also can use MIT orders, and always being conservative, knowing that the ATR is at this price, and if it's at 2 points, you may want to take instead 1 3/4. So instead of 8 ticks, 7 ticks. That's one way to ensure that you get. Oh, I must have had this here. Let me just close this out.
Target filled.
Okay. All right. Very good. Very good. Very good. Okay. So what else do we have? Scalping. So let's take a look at some scalping trades, and let's take a look at some other things. And you guys, if you guys want to throw a market at me, if you guys want to look at something specific, I'll be happy to bring it up. So for example, on scalping, I know many of you like to scalp. Let me turn off the at the open. Instead, let me put on the trade scalper. Let's see what opportunities exist and how we would look at it. So this is the trade scalper version that everyone gets, and the one that I'm going to show you is the demo version, which is right here, and this is the signals here. Okay, minute chart, scalping, right? We're using 1 minute chart. So look at this signal here for a moment. Here to go long at 21.72.75. So this signal that happened here, 21.72.75, if I look at the current conditions, they tell me right off the bat that the market is at 1.25. So what does that mean as far as scalping? It means that I can comfortably expect 3 ticks, 4 ticks out of this market. I recommend 3 ticks, and I'm not even pushing it to 1 times the ATR. But 3 ticks and a 6 tick stop is how you would manage this trade. So 21.72.75, the fill would be right here, 21.72.75. And if I cannot make this target, which would be 3 ticks, right? So it would be right here. If I can't make this target from here to here in a short amount of time, there's no reason for me to hold on to the trade. So I'm going long for a reason. It's all based off of price action. There's no magic moving average, optimized value, or anything along those lines. I don't use any indicators. Indicators don't work, guys. So please stay away from the run-of-the-mill indicators and which are actually here. All these indicators that you see here, they're all late to the party. Late to the party because after something happens, then the indicator says, okay, it's time for you to do something. Price action, on the other hand, is a little bit different. It first indicates the market is doing something, and then you prove it by going long or going short on the candles, on the closing price, on support and resistance, on something other than a moving average, crossover, or optimized values especially. Forget those because they may work beautifully in the past, they'll never work into the future. So nothing I teach and nothing I do uses optimized values or values of any type. It's all based on candles, price action with support, resistance, all that stuff. But no interpretation. And so now, as you go forward, if this isn't reached or isn't met, and let's say it touches here, and then it touches a second time, you better believe that if my target was up here, that I'll drop it down by a tick to ensure that the next time that it tries to get up there, I'm filled. Again, this idea of markets love to test where they've previously been. Perfect example. Market traded to this price, 21.74. Very next candle traded again to 21.74. If I had a target at 21.74 and it didn't fill me the first time around, drop it down, front run it, get that fill. There's no reason to lose out on this trade. Don't let this, if it happens to come straight back down, don't let it go beyond 21.72.75. Bring up your target, 1 + 1 or equal to or -1 from where you entered. It really does help with trade management. There's a lot of trades we can take. We don't want to let one trade destroy us or ruin us or blow out your account. That should never, ever happen. So think about trade management in a different way. It's not just one stop and one target and that's it. It's one stop, one target. Maybe I have to front run it as we move forward in time. Maybe I have to get out after a time element, a small win, a small loss, break even, because after 4 or 5 candles, this amounted to nothing. 3 or 4 hours later, this has nothing to do with why you went long. 3 or 4 hours later here, let's say here, what does that have to do with this trade? Nothing. Nothing whatsoever. And again, with the trade scalper method, if it doesn't set up properly, then there's no signal. So you see how the market is in a chop? There's no signals because it realizes this is not an optimal time to trade. And if I looked at, somebody asked for the crude oil, right, Angelo? And the notes, Chauncey, I think ZB is the notes, or the soybeans. FTSE, the Z contracts here are the crude. Short opportunity, long. There's a few different setups, double wick long as well as the regular long trade. Let me just move this out of the way. So both of these are telling you long here. This is a double wick method. I mean, I explain this all in the course. It's about a 100-page manual. Not just the software, but it's also the training that is included to teach you why and how this works. And so you're going long because of these double wicks. Again, this really important idea of testing where it's been. I know the market has went up here. Let me go long. Try to test that. Let me go long. Try to test that. Right? Long, right? Short. Not too bad. Crude oil doesn't look, it's not always this good, but crude oil is not for scalping. It's quick in and outs. Don't hold on to these trades forever. So not too bad, Angelo. Sergio. Okay, let's take a look at the ZB. ZB, the bonds notes. Let me just add that. I don't think I have it here, so hold on a second. Let me just add that here to my list. The bonds I'll add, and I'll add the notes too. I like the notes over the bonds personally, but it's neither here nor there. And don't you love the way that they change after the fact from 32 to 64 and then back and forth to confuse you even further? You know, another market I really like is the FTSE and the FESX. So let me just go back to, somebody wanted to see the bonds. Okay, so here, looking at the ZB. So that's the ZB on the trade scalper. Long, short. And if the market's not tradable, don't trade. And one of the things that I have here is on the trade scalper, the filter. This filter here, excuse me, allows you to say, if the market's too slow, don't trade. Don't show me a signal, and you can dictate how slow or how fast you want the market to be. Excuse me. So if the market is too slow, you can say, I don't want to see any trades below 2 ticks or below 3 ticks. You can dictate for any market this filter, because you don't want to get lured and see a signal when the market's slow. That's not going to work out. So you can see how slow the market is here, and it's more chopped than anything. You want to filter those out, those signals out. Yeah, let's take a look at the ES. Absolutely. Bob? So the ES here on the trade scalper looks like this. Just get some of these things out of the way. I would say the better of the trades this morning here, because right now the market's kind of in a chop. It's not really doing anything, and it won't give you a signal unless it's validated. It won't just give you signals that are worthless. It tries really to only focus on the trades that are really going to make it push through, push higher, push lower. If it's chopping around, it's not a channel trading type of method where it's channel surfs. It's called channel surfing, where you trade off of support and resistance. It doesn't do that. So here is the entry to go long. here is, based on this, is only 3 ticks. So I know already it's tradable. It's not too slow, it's 3 ticks, and there you go. So Bob, this is right as soon as the market opened here, 2170. I don't think it's really a good idea to trade right as the market opens, especially scalping, because there could be a big whipsaw up and down where it could chop you out. So I'm not a big proponent of saying 9:30, that bell rings, jump in, because you know it's happening. There's trading systems, there's big orders, there's stops that are happening from overnight, there's day session only signals that are being fired off. So right as the market opened, if you're a scalper, if you're some type of scalp trader, give it a few minutes after the bell rings, whether it's the London, the Asian, the US, any market. There's always just a lot of orders, buys and sells that are trying to get matched up. It's not, I think, with these small stops, a good idea to be scalping right as the market opens. So I tell everyone, wait 5-10 minutes just to get that out of the system, get out of the way of everyone positioning themselves, and then you can trade comfortably. Now, pre-market here, you have a couple of signals, right? So you have a short here and a short here. If you remember, I mentioned to you, not worth trading when the market's slow. Well, this signal here to go short at 2169.50 occurred at 1 tick. This is why that filter exists. If I place the filter at only show me trades with 2 or 3 ticks on the ATR minimum, this would not be seen. So the demo version that I'm showing you here of the Trade Scalper doesn't have that filter, but the one that actually you get, the purchased version, has, just bring it up here, has this option for the filter. And I always have it set to 2 ticks because I think minimum scalping, the ATR has to be at 2 ticks. It can't be any slower than that, because really, do you want to risk a trade for a tick? I don't think so. Okay, so that filter is important. Okay. All right, very good. So let me take a look here. ATO, I showed you the ATO. Trading the news, I didn't have a chance to show you trading the news. I'll show you that next time, next webinar. How to handle markets that are slow, front running, or realize if the market's slow to begin with by looking at what happened in the cycle of days. If the market has been 3-4 days in a row, this is the cycle we're in. But more importantly, beyond that, ATR. You can't trade when the market is slower than normal. And again, if you look at a 5-minute chart, my recommendation is always 1 point. You can't have a trade on a 5-minute chart unless it's 4 ticks. So long, and maybe we'll see another long trade here, possibly. Well, actually, this is a 5-minute chart, but it should be 1 minute. Yeah, so you see here, it's telling you to go long at 2140, 2174 quarter long. So not too shabby there. Now, if you don't get filled, or if you missed it, or if you are unable to get this limit order long, for whatever the reason, don't sweat it. There's plenty of trades. Don't chase this market. But that was the entry long 2174 quarter. Right now, that happened. I should have had it up, but I didn't realize the market was going to pop the way it did. All right. I have a class that I'm starting. Dave, one of my students, we have an 11 o'clock class. He's a private mentorship student. And usually with private mentorship, we create our own times, create our own days. So his class is at 11 o'clock on Tuesdays and Thursdays. And I have to meet with him. But if you're interested in joining the next mentorship class, September 6th, I believe, right after the holiday, we have a new class beginning. Email me. I'll send you all the details, the pricing. We don't have to pay all at front, all in advance. I actually split up the payments to make it easy for everyone. If you're interested in the Trade Scalper or Atlas line or the Power Price Action, again, all that information is on daytradetowin.com. Feel free to call me. Feel free to send me an email. I want to make sure that what I'm sending you or showing you and teaching you is right for you. When it comes to Forex, I recommend the Power Price Action or the Atlas line. So, call me up if you have any questions. I'm happy to answer your questions. I get 100 emails a day. Please keep it brief. I try to answer all the emails myself. My staff handles licensing, remote support, NinjaTrader installation. So they are set up to do their job. My job is to show you how to be successful when trading the markets. Support at daytradetowin.com, Sergio, or info at daytradetowin.com. Let me show you. Here is a blog spot here that I started recently. But if I go to daytradetowin.com, here you can get all the information, member access, the getting started guide. You can listen to the videos of the testimonials, the traders. These are real people, guys. These are not actors. These are not paid endorsements. These are real people that are my students. And if you want to speak to any of my students, my testimonial students, you can send me an email. I'll forward you their email address as well. And you can go to the courses, Atlas Line, Power Price Action, or Scalping, or if you're interested in the mentorship, you can find out all the information here. Have a great rest of your day. I have to start my class here with David, and I'll talk to you soon. Thanks, everyone. Bye-bye now.